Welcome back to the deep dive. You know, for many of us, there's this background noise almost of economic anxiety, political uncertainty. It just feels louder lately.
It really does. And we've seen sources pointing to things like spikes in precious metals
Yeah.
right after big political events.
Right, the whole Trump effect thing they mentioned, people getting nervous, maybe trying to secure their own assets.
Exactly. That underlying sort of panic is what the sources we've gathered are really focusing on. They're not just talking general instability, though.
No. What are they saying specifically?
They're presenting a very specific and, frankly, accelerated timeline for a huge global financial disruption.
Okay.
So our mission today is really to unpack this projection. It's pretty drastic.
Yeah.
The potential collapse, and a rapid one, of the Federal Reserve note.
Which is what we commonly call the dollar.
Right. That, plus the bond market, and then the knock-on effect on global retirement systems.
And the timeline you mentioned is, well, it's startlingly tight, isn't it?
It is. These sources claim they found linguistic clues, as they put it, suggesting a major turning point is coming extremely soon, potentially even this May.
May. Wow, so we're talking weeks, maybe. Not months or years for what sounds like a catastrophic failure.
That's the projection, systemic failure. So let's dig in. Where does it start? According to them, it starts with the dollar itself, or rather, the FRN.
Okay. What's the core problem there, according to these sources?
Well, the first thing they stress is that technically it's not the dollar we're using, but a Federal Reserve note, an FRN.
And they see that distinction as critical.
Very much so. They frame the FRN fundamentally as a debt instrument. It comes with built-in risks. Two main ones, really.
All right, what are those two risks? Lay them out for us.
Okay, so the first one is something we all kind of feel, inflation. The silent theft, they call it. Your money just buys less over time. That's one debt baked in.
Okay, the gradual erosion of value. What's the second risk?
The second one is maybe the more immediate danger in their scenario. It's that the note is backed by this really complex system of rehypothecated bonds and derivatives.
Rehypothecated, meaning pledged out multiple times.
Exactly. So the source argues this structure means the note itself is basically debt built on top of other layers of debt.
Yeah.
And if that system breaks,
Then what? What's the immediate impact they predict?
it's immediate and profound. They call it a haircut on the dollar, specifically a loss of 40/5 of its purchasing power.
4/5. That's
Yeah.
huge. How do they illustrate that?
They use a pretty stark analogy. Think about the price you're paying for gas right now.
Okay. Let's say $4 a gallon, for argument's sake.
Right. Multiply that by 5. Suddenly, it's like paying $20 a gallon, almost overnight.
$20. Wow.
That's the level of crash they're talking about. They say it would bring the dollar's value crashing down to basically meet the current value of the Chinese yuan.
Okay, so a massive domestic devaluation. But it doesn't stop there, right? They mentioned something called Repudiation Day.
Yes, and this is projected to happen pretty much at the same time. Repudiation Day.
What is that exactly?
It's the moment, they predict,
Yeah.
when potentially dozens of countries, 20, 30, maybe even up to 100, just refuse to accept the dollar for trade anymore.
And demand what instead?
Hard alternatives. Gold, maybe the yuan, rubles, anything but the FRN.
So a global rejection of the dollar.
Precisely. And interestingly, the source projects the euro gets hammered first, maybe just a day before the dollar. It signals this rapid unraveling across the whole Western fiat system.
Okay, that's already massive chaos. But you said the sources suggest this isn't a slow burn.
Not at all. That's the really striking part. They don't see this as a 2-week crumble. They predict a sudden, almost violent 2-day event, maybe a Tuesday and Wednesday in May.
2 days for a global financial system to effectively seize up.
That's the claim. That speed is key to their prediction. Day 1, the Tuesday. That's the currency chaos we just talked about. Dollar dropping, euro dropping, the repudiation kicking off. That's what everyone will see first.
Okay, so the focus is on currency values plummeting. What happens on day 2, the Wednesday?
Day 2 is when the hidden crisis, the one maybe not everyone understood, bursts into the open. That's the bond market failure, specifically because of this rehypothecation issue.
And they predict how this will be reported.
Yes, they claim the mainstream media will report it as a 20-to-1 crisis in bonds.
20-to-1.
Right.
Can you break that down? What does rehypothecation mean in simple terms for someone holding a bond?
Sure. Imagine you have a valuable painting. You store it in a gallery's vault for safekeeping.
Okay.
But the gallery, instead of just holding your painting, issues 19 identical-looking claim tickets for it to other people, taking their money. You still have your original receipt thinking you own the painting.
But 19 other people also think they have a claim on that same single painting.
Exactly. Now, if everyone shows up at once wanting their painting, well, only one person gets the real thing. The other 19 claims are worthless.
So, applied to bonds, 19 out of 20 bondholders are essentially holding nothing. Fake instruments.
That's the core of the projected crisis. And the problem gets worse because supposedly no one can easily tell who holds the one real bond in any given chain.
And even if you could, the whole system's value collapses once this is exposed.
Right. Even the legitimate bonds become basically worthless because faith in the entire structure is gone. It's revealed as largely paper promises. And the source makes a critical point here. They argue that U.S. dollar FRN-backed bonds are the world's actual reserve currency in practice, not the physical dollar bills.
Not the cash, but the debt instruments based on it.
Yes. They compare these bonds, somewhat provocatively, to like a crypto private key, just serial numbers on paper. But, and this is key.
Without the blockchain.
Right.
Without that verification layer.
Exactly. No decentralized ledger to prove ownership or prevent this kind of massive over-leveraging. That lack of verification combined with the 20-to-1 scale is the potential catastrophe.
So the bond crisis then cascades.
Yeah.
Makes derivatives worthless.
That's the prediction. A rapid ripple effect. Derivatives based on these bonds become worthless, leading to this ongoing degradation across the whole social order.
Okay, let's shift to that, the social order. What does this predicted financial meltdown mean for, the average person living in the West?
The sources are blunt. They say this will be hugely, massively disruptive, and it affects all Western liberal republics, U.S., Canada, Mexico, Europe, Australia, New Zealand, parts of Asia.
And the specific target within that disruption?
Retirement. That's the bullseye. Funds backed by these derivatives and dollar bonds, think 401ks, social security systems, pensions, even things like, city council pensions in England.
What happens to them?
They're expected to, quote, go poof. Or, best case scenario, they retain only 1/5 of their purchasing power.
So the number on your statement might still be there, but it buys 80% less.
Precisely. The value vanishes. And to make this feel real, they point to history.
What examples do they use?
Two main ones. First, Weimar Germany, 1923. The collapse there. They specifically mention the retirement system getting wiped out.
And the result.
Once people realized their life savings were gone, the source says the population just walked away, abandoned the government, state institutions, lost all faith.
Okay, that's one parallel. What's the other?
France in the 1960s. They implemented a similar scale haircut. 5 old francs became 1 new franc. Essentially that 4/5 reduction again.
And how did people react then?
According to the source, with severe riots, people burning banks, government buildings, the fires and smoke visible for miles. Real social breakdown.
So they're predicting a similar level of social unrest this time.
That's the implication. Massive popular uproar, fueled by fear, anxiety. And they couple this with the prediction that current political structures just won't be able to cope.
Now, we should be very clear here. The sources use some extremely strong politically charged language about this phase, right?
Absolutely. We need to state this carefully. They describe politicians using terms like incompetent, use loaded phrases like diversity hires, and predict actual political violence politicians being, quote, offed in the street.
Okay, so we are just reporting this extreme viewpoint from the source. It's their prediction of the societal fallout once retirement funds evaporate. We aren't endorsing that language or prediction.
Correct. It's a very pessimistic, extreme view presented in the source material about how society might react.
Given this really dire forecast, what about the immediate reaction? Are people acting on this kind of fear already?
The sources argue yes. They point to recent political events, like the Trump arrest mentioned earlier, acting as catalysts. People are already moving to secure their own financial safety, they claim.
Is there any data backing that up in the sources?
They offer one specific data point, a reported 4% jump in silver purchases right after some of these political events. They see this as a sign of building panic.
And what do they predict happens to silver if this crash unfolds, as they say?
They predict physical silver will basically disappear from the market within about a week of the main event kicking off. Why? Because, quote, there isn't that much physical silver available to meet that kind of panic demand.
Okay. And the dollar, or FRN, where will it still work?
Initially, the prediction is it only really holds value inside the U.S. Outside the U.S., you'll meet hard assets, specifically gold, they mention, for essential imports like oil. The FRN won't cut it internationally.
What about the longer-term outlook presented in these sources, beyond the immediate crash?
It's pretty bleak, honestly. They suggest the FRN collapse will devastate Russia, too, as its fate is tied to the dollar system.
And for the West?
The prediction is Western republics turn inward. They abandon external commitments. Things like NATO become unaffordable, unmanageable. All focus shifts to dealing with the massive internal uproar and social crises.
Rebuilding. Is there any timeline for that?
The source speculates about a potential 20-year rebuilding process. But crucially, only after people supposedly come to terms with reality and see through what the source calls the lies and deception of the current system. It's a very long, painful road in their view.
Right. Well, this has certainly been a deep dive into a very dramatic, very specific, and frankly quite alarming projection.
It is very intense.
So key takeaways for you listening. First, the sheer imminence. This source is talking May. Second, the two-stage nature. Day one is the currency shock, that 4/5 value loss. Day two is the deeper bond crisis, the 20-to-1 rehypothecation reveal.
And third, those historical parallels, they use Weimar Germany, 1960s France. They argue history shows that kind of purchasing power destruction leads to major social and political breakdown.
Yeah.
And the source really emphasizes that this isn't just finance, it hits the whole social fabric. It creates this anxiety that's hard to ignore just reading the news. So maybe a final thought to leave you with, based on their framework. Given those historical examples, riots, government collapse, how might that same scenario, realizing your retirement is suddenly worth 80% less, play out differently today? In our world of instant information, deep political divides, already frayed social trust, what unique new crisis, beyond just the financial shock, might our generation face if something like this actually happened? That's building on their ideas, something to really consider.